All right, listen up. While the crypto masses are panic selling their Bitcoin at a loss during every dip, a tiny group of disciplined investors are stacking sats and building generational wealth using a dead simple strategy that thrives on chaos. In fact, data shows that investors who bought Bitcoin during panic sell offs and held for just 2 years saw average returns over 200%, while panic sellers locked in losses they never recovered from. If you've ever felt that gut-wrenching fear watching your portfolio bleed red, wondering if you should cut your losses, this video is about to flip your entire approach on its head. Because what if I told you the best time to be greedy is when everyone else is losing their minds? Quick heads up, this is for educational and entertainment purposes only, not financial advice. Do your own research, folks, and consult a pro before making moves. Now, here's the thing about Bitcoin that Wall Street doesn't want you to know. It's literally designed to punish emotional decision-making and reward patience. While CNBC is screaming about Bitcoin's death for the 477th time, and your uncle's selling his stack to cut losses, the smart money is doing the exact opposite. This isn't some tinfoil hat theory. This is cold, hard data backed by over a decade of Bitcoin cycles. And today, we're breaking down the exact strategy that separates Bitcoin millionaires from the broke panic sellers crying on Reddit. Let's paint a picture. It's 2018. Bitcoin just crashed from 20,000 to 3,000. The media's writing obituaries, and your coworker Dave is bragging about how he got out before it went to zero. Meanwhile, some quiet investors are buying Bitcoin like it's a Black Friday sale at Walmart. Fast forward to 2021. Bitcoin hits 69,000, and those same investors are up over 2,000%, while Dave is still working overtime to pay off his Dodge Charger. What happened? Emotional discipline happened, historical data happened, and a beautiful little strategy called dollar cost averaging happened. Here's the brutal truth. Humans are wired to be terrible investors. We're emotional creatures running Stone Age software in a digital age, and nowhere is that more obvious than in Bitcoin markets. When prices pump, we get FOMO and buy the top like we're buying Supreme drops. When prices dump, we panic sell like the house is on fire. It's the same story every single cycle. The herd loses money while a small group of disciplined players stack wealth. The difference? Emotional discipline and a strategy that works with human psychology, not against it. Let me hit you with some data that'll blow your mind. According to on-chain analysis, over 70% of Bitcoin sold during major crashes is sold at a loss by retail investors who held for less than 6 months. Meanwhile, long-term holders, people who've owned Bitcoin for over a year, rarely sell during crashes and consistently come out ahead. It's literally the tortoise and the hare, except the hare has anxiety and a Robinhood account. History doesn't just rhyme in Bitcoin, it practically plagiarizes itself. Every cycle we see the same pattern: euphoria, crash, panic, capitulation, then recovery. And every single time, the investors who kept their cool and stuck to the plan made bank. So what's the strategy? 3 words that sound boring but print money: dollar cost averaging. Now, before you roll your eyes thinking this is some basic advice, stick with me. Because when you combine DCA with emotional discipline during panic moments, it becomes an absolute weapon. Here's how it works. Instead of trying to time the market like you're some Wall Street psychic, you invest a fixed amount of money into Bitcoin at regular intervals. Weekly, bi-weekly, monthly, whatever works for your budget, regardless of the price. Sounds simple, right? That's because it is. But simple doesn't mean weak. Let's run the numbers because math doesn't lie like Twitter influencers do. Say you DCA'd $100 into Bitcoin every week for the past 4 years, through the crashes, the pumps, the fear, the FOMO, all of it. You'd have invested about $20,800 total, but your Bitcoin holdings would be worth over $60,000 today, and you'd have completely eliminated the stress of trying to buy the dip or sell the top. You remove emotion from the equation and let the math work for you. It's like setting up an automatic transfer to your 401k, except your 401k isn't denominated in dollars that the Fed prints faster than monopoly money. But here's where it gets spicy. DCA is powerful on its own, but it becomes absolutely unstoppable when everyone else is panicking. Think about it. When Bitcoin drops 30% in a week and the news is screaming, crypto winter, your $100 DCA suddenly buys you way more Bitcoin than it did last month. You're literally shopping at a discount while everyone else is running for the exits like it's a Black Friday stampede in reverse. The panic sellers are giving you their Bitcoin at bargain prices. It's the transfer of wealth from the emotional to the disciplined, happening in real time on the blockchain. And here's the kicker. Historical data backs this up so hard it's not even funny. Let's look at the 2020 COVID crash. Bitcoin dropped from $10,000 to $3,800 in a single day. The panic was biblical. People were selling everything. But if you DCA'd through that chaos and held for just 18 months, you saw Bitcoin hit all-time highs above $60,000. That's over a 1,400% gain from the bottom. Even if you weren't perfect and just kept your regular DCA schedule through the fear, you crushed it. Or take the 2018 bear market. Bitcoin bled for a full year from $20,000 down to $3,000. Media declared it dead. Bloggers wrote "I told you so" articles. But DCA investors who stayed disciplined and kept stacking during that bloodbath, they made generational wealth in the next bull run. And don't forget the 2022 FTX crash. Bitcoin tanked from 69,000 to under 16,000 amid the chaos. Yet those who DCA'd through it saw prices rocket to over 126,000 by mid-2025 before the latest dip. That's another monster recovery proving the pattern holds. Now, I know what you're thinking. But what if this time is different? What if Bitcoin really does go to zero? Okay, fair question. Let's address the elephant in the room. Bitcoin has died over 477 times according to mainstream media. Every crash brings out the obituaries. Yet here we are with Bitcoin being adopted by corporations, nations, and institutions that manage trillions of dollars. MicroStrategy's holding nearly 650,000 BTC. El Salvador made it legal tender. And now 27 countries have some exposure to Bitcoin. These aren't crypto nerds in their mom's basement. These are heavyweight players betting serious money on Bitcoin's future. Could Bitcoin fail? Sure, anything's possible. But betting against the hardest, most secure, most decentralized money humanity's ever created, when it survived wars, regulations, crashes, and bans for 16 years straight, seems like a pretty emotional move, doesn't it? The real risk isn't Bitcoin going to zero. The real risk is you panic selling at the bottom because you couldn't handle the volatility. The real risk is you stop DCAing during a crash because it feels wrong to buy when everything's red. That's your emotions hijacking your strategy, and emotions are the killer of wealth in Bitcoin. Think of emotional discipline like this. Bitcoin is a wild bronco and the market is a rodeo. You can either grip tight, stay disciplined, and ride out the chaos, or you can freak out, let go, and get trampled by the herd. Your choice. If you're nodding along thinking about your own setup, what's one thing holding you back from committing to a DCA strategy? Share in the comments. I'm curious if it's fear, uncertainty, or just not knowing where to start. Let's talk tactics for a second. How do you actually build this emotional discipline? First, automate your DCA. Seriously, set it and forget it. Use apps like Swan Bitcoin, River, or even schedule buys on your exchange so you're not sitting there every week debating whether now is a good time. Automation removes the emotional decision. Second, turn off the noise. Stop checking the price every 5 minutes. Delete Twitter if you have to, or at least mute the panic merchants and laser-eyed bros screaming about moon missions. Bitcoin's a long-term play. Treat it like planting an oak tree, not day trading penny stocks. Third, study the history. Pull up Bitcoin's price chart and zoom out. Look at every crash, every recovery, every cycle. Pattern recognition builds confidence, and confidence builds discipline. Here's a little Easter egg for the OGs. Remember "he bought" dump it memes from 2018? The entire joke was about how the market seemed to punish emotional decisions. That meme became legend because it's true. Bitcoin rewards patience and punishes panic. The veterans know this. They've seen the crashes, survived the FUD, and came out richer because they didn't blink. You don't need to be a genius. You don't need insider info. You just need to be disciplined enough to keep stacking when everyone else is losing their minds. And look, DCA isn't some magic bullet that guarantees you'll get rich overnight. Bitcoin is volatile, and there will be times when your portfolio is deep in the red, and it feels like you're throwing money into a black hole. That's the test. That's where fortunes are made or lost, not on the charts, but in your head. The investors who win are the ones who understand that Bitcoin operates on longer time horizons than traditional markets. You're not competing with Wall Street algos. You're building a position in the hardest money ever created, and that takes time. Rome wasn't built in a day, and neither is a Bitcoin stack that sets you free from dollar debasement. So here's the bottom line. When everyone else panics, you DCA. When the news says Bitcoin's dead, you DCA. When your portfolio's bleeding and fear's screaming at you to sell, you take a deep breath, remember the history, and you DCA. This strategy works because it's designed for humans. It acknowledges our emotional weaknesses and builds a system that bypasses them. It's not sexy, it's not exciting, but it works, and the data proves it cycle after cycle after cycle. The Bitcoin strategy that works when everyone else panics isn't some secret sauce or insider hack. It's emotional discipline plus DCA plus historical perspective. That's it. The panic sellers will keep losing. The disciplined stackers will keep winning. Which side of history do you want to be on? All right, if this video just rewired your brain and you're ready to level up your Bitcoin game, smash that like button right now. It tells YouTube to spread this to more people who need to hear it. Subscribe if you want more Bitcoin firepower that cuts through the noise, and hit that bell so you never miss a drop. Share this with your crypto crew, your coworkers, that one friend who panic sold in 2022. They need this. And drop a comment below. What's your Bitcoin hot take? Are you team DCA or are you still trying to time the market? Let's talk. Stay disciplined out there, stack sats, and I'll catch you in the next one.